Welcome back. You're watching Lunch Money. The global markets are doing well. Europe has been pretty much up and strong, and Asia was also after latest data from China. And that has egged on our markets just that bit, though we've had a fair bit of early run-up after the rate cut, but we are now up about 23 points, as you can see. The big mover is really on the downside is HCL Technologies, which is down 11% after its warning. But on the upside, we have Ultratech Cement and the entire cement pack, which is doing extremely well. Ultratech is up 3.5%, followed by Lupin & Son. But we also have Ambuja Cement, which is among the top gainers out there, as is ACC. So let's get Mayuresh Joshi, fund manager of Angel Broking, into this conversation. Mayuresh, thanks so much for joining us. I want to start by asking you about what's happening in the cement counters. This is not the first time we've seen a spurt in cement counters, Mayuresh. And the last time also it was on the back of news that they had taken a price increase and that, the northern markets were proving to be very good. What is driving this round?
Clearly, I think once the monsoons are over, and obviously the monsoons have not been great this year, the cement activity starts picking up, and with expectations of government reforms coming through on the infra side, the power side, the road side, you're going to see a huge amount of activity on the volume front for a lot of these cement companies across the country. Having said that, the current utilization levels across the sector lies between 70-72%. So there is ample scope for utilization levels to go up. And though realizations have primarily fallen over the last few quarters, we see steady realizations happening over the next few quarters, aided by utilizations picking up, which will ensure that the return ratios for a lot of these cement companies start delivering better numbers. In that sense itself, I think on an EBITDA front and an operating front, we're expecting a huge amount of pass-throughs to come through because of the fall in input prices. So I think the cement companies across regions should largely benefit over the next 3 to 4 quarters, with an uptick in capex activity picking up substantially, at least over the next 2 quarters. Having said that, I think from a valuation perspective, mid-cap cement is something that we continue to like. So I'm very, very constructive on the space over the next 12 to 18 months. Our belief is that companies like JK Cement, JK Lakshmi Cement can do well in terms of their margin expansion happening and valuations looking attractive at this point of time.
HCL Technologies, we've had a fair number of analysts talk about it. It's a stock that has done fairly well, Mayuresh, so it is expensive as well. How much downside do you see after the 11% shave off today?
So clearly, I think on all 3 counts, it has been a little bit of a disappointing factor. The cross-currency margin hit of 80 pips is a tad bit higher, is what I feel. Clearly, I think the client-specific issue is something that HCL Tech will have to comprehend with. Again, it will put a dent in terms of how the image of the company is portrayed going forward. And third, I think on the IMS front, which has been a sole front runner in terms of how performance of the company pans out, I think even there are transitional issues, as the management has indicated. Having said that, our take is that the EPS hit, because we do not have specifics at this point of time in how much hit overall the company is going to take based on their numbers of 20 million that they've come out with. And if you do a little bit of further analysis, I think a 5 to 6% EPS hit is what we're expecting HCL Tech to report. However, I think the valuations remain extremely attractive. Their engineering services division, which contributes 19%, I think that is seeing decent amount of traction happening as well. So our take is that we are still maintaining a status quo, which is a buy rating on the stock. Our target price still remains at 1100. On the downside, yes, I think a 5-6% further correction cannot be ruled out. But again, I think the valuations become attractive, and the overall scheme of things, HCL Tech at this price, I think, looks sweetly placed.
A lot of banks have come out with base rate cuts, Mayuresh. How do you see, the entire pickup in credit panning out, and what does this downward rate cycle mean for these banks? How are you actually gauging valuations and metrics right now?
So clearly 2 ways of looking at it. A, I think the rate cut will spur the retail growth, at least on the home loan, the auto loan front. And clearly, I think that is the thesis that a lot of analysts on the street are working with. Going by past historical records, the credit growth has not been great. So I think one does not really expect over the next 2 quarters at least, I think, to see a quantum jump happening in terms of how credit growth will pan out. I think it is still languishing close to those double digits, lower teen double digits, 11-12%. So clearly, I think our take is that with an uptick in the economy, I think with the festive season coming around, if there is further boost in terms of how numbers will pan out in terms of auto loans, home loans, I think that will have a telling effect in terms of how the credit growth will pick up. So I think this is one parameter that one really needs to see over the next few months. And clearly, I think from a stock picking perspective, I think private sector banks is something that we continue to like. Our take is that the return ratios will remain extremely strong in an environment where one really assumes credit growth picking up, asset quality remaining stable, and capital adequacy remaining strong for a lot of these top tier names. So Axis, ICICI, yes, is something we'll continue to like.
Fair enough. Maruti has been a favorite, Mayuresh, but the sales numbers have not been very good for September. In fact, it's looking pretty bleak on the export and domestic front. The stock in a 1 month perspective is up about 13.5%. And I know, I mean, a lot of brokerages had buy calls on Maruti. Would you reassess it after this set of numbers, or do you think structurally things have changed for the company?
So I think again, Mini, I think the sales numbers are a little bit disappointing because I think you're assuming Maruti to keep on posting robust numbers. However, I think the product mix that Maruti has, specifically in the mid and the entry car segment, remains extremely strong. The market share is extremely strong, a very, very healthy balance sheet. And if one really assumes that the four-wheelers will do well from an urban demand perspective, our take is that an earnings growth of 36% for Maruti is still not ruled out. So I think we're very, very close to our target price of close to 4,735, 4,740 on the stock. So clearly, I think from the current market price, the upside looks a little bit limited. But if the stock does correct, I think Maruti still remains one of our favored picks within the four-wheeler space.
In fact, I said over a month's period, but over a 6-month period, Maruti Suzuki is the top gainer as far as the Nifty is concerned, up 26% almost. So correction perhaps likely according to Mayuresh over here, or at least a limited upside from here. Mayuresh, pharma, you can't have a conversation these days on markets without talking about pharma. Look at the way they have run up. It's really gravity defying in a market where the general sentiment is one of caution. Do you see pharma stocks going up more ahead into the next couple of months?
So clearly, Mini, again on the pharma front, I think a huge opportunity does exist for a lot of players because I think the generic off-patent market size in the US itself is pretty huge. Yes, I think there have been some intermittent FDA issues related to a few companies. But clearly, I think most of the companies exhibit a very strong ANDA pipeline. And again, I think the approvals, once they start coming through, I think that's going to aid these companies substantially. So I think in terms of valuations, a lot of the companies, at least in the top tier names, look fairly valued to us. Dr. Reddy's, I think we've still seeing some amount of upside left onto the stock with a target of 4,250. However, I think if one really needs to pick and choose within the pharma space at this juncture, Aurobindo Pharma is something that I still continue to like. Clearly, I think if you look at the acquisitions that Aurobindo has done on Actavis Napro, 80% of its business comes from formulations. Management expects 18-20 approvals in terms of injectables to come through, which is again a very high margin business. And again, I think if you look at the ARV contribution, which is a niche playing field for Aurobindo, I think that is also expected to do well because a lot of drugs will go off patent in that segment as well. So clearly, I think Aurobindo lies in a sweet spot. Valuations not too expensive compared to a lot of the other peers, even at this juncture. So Aurobindo is something that we still continue to prefer within the pharma universe. And as I mentioned earlier, Dr. Reddy's is an accumulative rating, but I think again we are very, very close to our target price. So I think we'll revise or revisit these stocks once the numbers come out, and then we'll probably be re-rating all this.
Right, Mayuresh, thanks so much for that. For our viewers who are thoroughly confused with what's been happening in the markets over the year, over the last 2 years, and how Indian markets have actually, gyrated with every bit of global news, we've got a special series for you because we believe that markets and investments are about the long term, and who better to tell us about that than some of India's finest investors, who are veteran investors who have bet on the Indian market over not just the last 5 years or 2 years or 3 years, but rather over 2-3 decades. And I've got a very, very special panel joining me over here in the studio of veteran investors, and I'm very curious to find out what they are making of the markets right now and where they're placing their bets. So after the short break, we'll come back with that And of course, Sri will also be joining us from Prabhudas Leeladhar to talk about strategies in the long term and what returns do equity markets really give you. We come back with that.